Good evening. It is 10 minutes after the market closed on Friday the 4th of August 2023, end of the week, and let's go to the weekly chart before we start to see how we ended, which more predictably we ended on this nice weekly candle, and we are currently in right onto this 8 moving average. So next week we've got two choices the market's going to make. Are we going to break down through this area of support, and it would also mean breaking down through this 8 moving average, and if we do, then our next area would be the 20 moving average, or are we going to bounce and put in a double top, retest the top and go sideways for a bit before either continuing up or breaking back down again. So that's what we've got in the next week to look forward to. Let's go through my trade today. One more thing to notice on this weekly: if we do push through, we've got that area there. 4700 is our next possible target. Possibly this area here, 4700, 4750, that area. So if we do see us bounce off of this 8 moving average, which we've bounced off it since March, so the last time we broke it was back in February. We didn't break it too long, we pushed up, we tried to break through this moving average, we tested the 20, so that's probably the most likely scenario if we see a move down, and we were able to hold this 8 moving average all the way up. So Monday is a big test, and Monday what we're going to see happen, either we're going to break down and maybe move into this 20 moving average, or we're just going to bounce off it totally and maybe retest this top again for a high. There's a few scenarios playing out, or we're going to break through and test these pivots from April, March last year. So that's the week ahead. Let's just discuss this week. We've got this big red candle, and I'm going to go through today's trade. So going down into the hourly time frame. Look at this, we're putting in this nice, lovely 3-bar play. So for a potential breakdown, but we'll see. It's looking weak at the moment. We've broken through this hourly bear flag, what was setting up. Let's draw the flagpole in. So we've got this hourly bear flag, and we tested at the top of this bear flag, and we couldn't break through 45.60, which was this area of resistance and area of supply, and it was a nice move down, a big move down. So today my trade, which I'll go onto the 5-minute chart, no pre-market trading for me because we had numbers coming in at 8:30, this area here, and we saw a bit of movement. So my first trade today was a short, and I was watching this area of high volume concentration. We've got this pivot here, we've also got this red line on a point of control line and a level identified from that line, which was at 45-47 area, and I was purely watching volume on the 5 and the 2 minute. And on the open we pushed up. I didn't touch it on the open at all. It wasn't until we pushed down and then we came back up. Let's just go into the 2-minute chart for a second, because my entry is better defined on that one. And we're looking at 9:30. Here we go. This is much better. I recognise this chart because it's the one I used. So my first entry was the top of this zone here, and it was on this red down candle. So I got in as it came down, pushed down. I was in profit for a bit, and I took a little bit off, and I was waiting for an add. It came back up, it hit my break even, and I still held because I was going to hold anyway, and the only reason I held is because I was watching decrease in volume, and not at one point did I want to get out of this trade, because I was watching the decrease of volume. So I added again up here, so I was in the trade. It wasn't full size position, because I wasn't 100% sure it was going to break down, but I was pretty confident it was going to break down because we had decreasing volume, and then obviously we had this big sell-off, and so I got out. I think I got out on the VWAP, and I held some and got out further down on this level here, and this bottom tap on increasing volume looked like ending volume as well, above average volume, and I got out as it broke this candle here, so I was out there. So that was a great trade. So my trading day was done within the first 20 minutes of the day on that move down, and again based on volume only, and we had weak volume. The only time we saw pushing volume was here, and then the next trade I took, in fact I got chopped around a little tiny bit, took a few stops, only a very minor stops. So just look for my entry. So my first entry was around the VWAP, and I wanted it to go short. Initially it did, but it was a silly entry because it wasn't near one of my places of one of my levels, and I was purely going based on, I was looking at price action and volume, and we saw reducing volume, and it looked like it was going to bounce around this area, but I didn't use confirmation to get in. I should have probably got in on the break of a candle. It would have been a 5-minute candle, probably down here for the short down, but I didn't. I got in again on the 2-minute chart, and I stopped out. So I took a few paper cuts. I stopped out there, and then I used my level again as well, and I stopped out there. It wasn't big stops, but it's eating into my profits from this nice trade down, and so wasn't too pleased with this. And then my next entry, I was still trying to find a short, and I had this zone. I want to retake a similar trade to this one, so I got in on this zone here. Again, the volume, you look at the volume, and this white moving average is in a decline, which is showing weak buying, and at some point we're going to see a move down. So I got in there as well, and I added there, and then let's go into, let's move up a bit, and then we pushed up even further, and my out was there on that push up there, so it's a bit disappointing. So another paper cut trade, and I was trying to take the level, and it did, and because of the weak volume, really small volume, every time it pushed down it looked like we were going to break down through it, but we kept pushing up. We pushed down again, we even broke it, and then we had increase. I missed the increase in volume. I should have paid attention to that, but increase in volume on these candles looked like it was selling off. Small candle, the candles were getting bigger and bigger as these candles were increasing in size. So I was really confident at this point that we were going to break down, but it didn't happen. We had this big green up candle which took out all of this, and so I got out. So that's another loss. So it wasn't particularly great trade, and I shouldn't have even been trading. I was over trading by this point, but I'm not one to give up, and I wanted to regain my losses as well. So again, we still had very weak volume coming into here, and then I saw this candle pop up which I thought would have been ending volume, so I got in on this entry here, and that was just a small position, and then I waited and I saw volume decreasing again as price action was moving up, so I got in another position there, and I took another position right on the high of the day, and again that's on decreasing volume. And so if I just scroll over this way, you see the volume better, clearer. So we had very low volume all the way up there, and it looked really weak. So it's like and we were moving far away from the moving averages as well at this point. I think on the 5-minute we were quite far, the moving averages were quite spread away. So I was in here, and then obviously we can see this lovely run down, and it sold off for the rest of the day. So my first out was on the 50 moving average, because I'd oversized a little bit by this point. I wouldn't say oversized, but I shouldn't have been trading at all, and I only wanted to take half a size, but I was in a full size position at this point. So I got out of contracts here, then I got out of this level as well, and I held on to a couple of runners, and my last out was at this level here, I got out there, that it came down. I thought, okay, I can hold the runner down to my next level, and it started pulling back. As soon as it broke out over this point of control and this I got out just at that on my level there. So I was all out, and little did I expect. And again, it's on increasing volume, but what's the volume like for there? Here we go. Had I been paying attention to the volume, not just looking at the price, that was fear taking over, I would have realised the volume was decreasing. So we had decreasing volume down here, and all this was a little pullback. And so I think I was more relieved to get out of my trades for being oversized, and I made up all the profit as well, and I made extra profit as well. So my analytical mind kind of didn't kick in, and that should have been an indication to hold on to that last. I only had one runner left at this point, and maybe I should have added there, because that would have been a great add point as well. And look, it just ran down all day until we closed 10 minutes ago. So that's our closing candle here. But one thing to note though, my levels, these are levels I predicted in the pre-market. I didn't predict them, I used supply and demand, support and resistance to plot the levels, and the levels held. So we pushed through these levels here, but it came back, it pulled back and retested it, pushed through to this level, through back, retested it, and then it just hovered along this level. Look how close these candles were consolidating on that level, and then it pushed up, and then up to the next level, this level here, and this area I've highlighted in this red area, and it double topped off of there, and so proved a good level and down. So the levels are never going to be 100% accurate to the penny, but they give you regions to concentrate on. And it came down, we pushed through this level, we did come back out, retest it, and down, hesitated there, and then we bounced off the bottom. That was my first trade actually where I got out. And then look, the level again, we came in, we touched that level even though we went through it last time, pulled back, and then we pushed through it, a little bit of pullback close to the level, all the way up to, and then we pushed through this level, and then got to this area here, pulled back, and then we hovered on this area for a bit, touched that level there, touched it again, and then we pushed through. So these are all warning signs that even if we don't break through the level, we're retesting the level, and we can look to use these levels in both directions, either as a bounce or as a break, and retest it like that. Retested it there, retested again there, retested the top of this zone there. So all these levels are all valid. They could have all been add positions. Came up, pushed through that major level, and then come back and retested it though. So that's a break and retest. And look at that, off of this level here, 46.50. Come back, retest it a second time, and then we came down, and then look, we consolidated along this yellow line again before breaking down, and the levels are still in play. Levels in play. We hesitated, break and retested this level, and it's around the moving averages and VWAP. Came back down, broke through it, came back up, retested this level again, all the way down, and now look what we're doing. We tested this level once, twice, 3 times, 4 times, 5 times, 6 times, and then we finally broke through. Came back up, touched the level again, broke through, and now we're just hovering on that level. So these levels, they work, and if you get the direction and you're very strict with ads and you're strict with your risk management, can actually do quite well from these levels. And that's the reason I prefer levels now to make trades in patterns. We had a couple of patterns here we could have looked at. We had this lovely GBI there. Look at that, that would have been a lovely rundown. We could have taken this bear flag there, another bear flag there, but I don't need to look at levels. You can look at levels and look at patterns and use them as a part of your strategy. So you could use the level up here and a break of the GBI, bear flag on an actual major area, another flag on this level. So lots and lots of good things come out of looking for levels every day. Anyway, that was my day, a good successful day, one of my best days for a long time. I'm going to quickly look at oil because today I was watching for a double top on the hourly, and it did touch the double top and rejected it, right down to here, and it came back, and look what it's done. It's come back and so this is the level here. This is a 60-minute chart. So it came up, touched it, rejected it off the VWAP, so that would have been a good entry, and I think I'll put that as one of my levels in my video today. And then it came through, bounced, and it's retesting this level now for a potential run up. So keep an eye on oil for a continuation of this trend. And on the daily, we're putting in a higher high, higher low, higher high, higher low. Maybe we're putting in another higher high. So crude oil's one to keep an eye out for next week, and NQ and Qs. So I think I'll put some levels in here as well. And look at that, yeah, so the levels all valid as well on the 60-minute. So the levels were this one here, 378. I mentioned that in the pre-market, and it came right up into 378 and rejected it. And we had a bit of movement around these levels, so this is an area of convergence, heavy volume as well, but it was also bottoms of candles. So that's the area I was watching. We kind of came straight through it, and we came back to this zone, which is 371.50 area, and look at that, it bounced off it and looked like hopefully it might break through for another short run on Monday. So good day, good levels all working, and I'm signing off on a good week. 100% green week, every day was green, so I'm very pleased with that. Okay, have a good weekend, and I'll speak to some of you on Monday. Take care.